Welcome to my final morning report chart appraisal on Wednesday the 1st of June with me, Richard Perry, market analyst at Antec Markets. Let's look at gold. And we've seen this slide in gold where we actually saw sort of 9 negative candles in a row. But that started to turn around slightly. We saw that just return of a bit of a safe haven sort of mindset in the last sort of 18 or so hours of trading, where gold has rallied, the yen's rallied, treasury yields are lower, and that sort of obviously turned around this chart to a certain extent. The support coming in, just holding now and pushing back above 1200. Positive candle was the first in 9 candles, or 10 candles I should say, and it's sort of to a certain extent continuing today, but I think this is still the early days, and I think that let's not get too far ahead of ourselves, because I mean there's a lot still need to be done. Look at the stochastics, have turned higher, however not confirmed yet as a buy signal. RSI still below 40, MACD lines still sort of below below neutral. So there is still a lot that needs to be done, and you could argue that sort of overhead supply within the outlook is still an issue. Now you've seen this downtrend that has been broken, but you've got this 12. I mean I've got a pivot line at 12.25 here. It sort of is a historic level to a certain extent. 12.25. How far back can I go? Yeah. It's all good. It actually goes quite a long way back. It's one more. So 12.25 is a certain extent a pivot level on the historic chart, isn't it? So just keep that in the back of your minds. But certainly the reaction high that we saw on the 27th was 12.23.50, but 12.33.60. That is your key near-term high. If you see a break above that, I think that would be considered to be a turnaround once again, and you continue, and then you'd sort of play the range once more. But until that is seen, I think that would suggest that the sort of the momentum is still negative within this chart. Near term, you'd argue there has been an improvement, or certainly the pickup in the hourly RSI and MACD lines as well, but they've have rolled over to a certain extent. If you see the hourly RSI back below 50, I'd say that would be a little bit of a concern once again. But you look at this chart, I think on a medium-term basis, or across the last sort of 3-4 months, you'd say, well, that actually is a range, isn't it? You're sort of trading in a range, sort of back towards the bottom of the range. 1191 is basically the support, isn't it? 1190.40. But that was also the big breakout of the October high from 2015. So that is your key floor. But above that, I think you can still arguably sort of look for potential buy signals, and as I said, above 12.33 that would be a buy signal. But until that's seen, I think the pressure could sort of remain to a certain extent to the downside. And looking at these momentum indicators, I think that's fair enough. So I wish you good luck in your trading today, and I wish you good luck, and I'll speak to you later. Thank you.